This international arbitrage is about captive insurance companies trying to explain more about captive insurance. Captive insurance is something which is done by a lot of Fortune 500 global multinational companies. It makes complete sense to them. They have hundreds of millions of dollars of insurance premiums every year. And so by setting up their own insurance company, they pay those premiums into a company that they own. And then after regulatory compliance and other financial engineering, they are able to accumulate a vast amount of capital, pay claims that need to be paid. But basically, they're accumulating a large amount of wealth in their own insurance company rather than paying it away to a third party insurance company. Now, um, apart from life insurance, which is really difficult, which is very difficult insurance business, you know, captive insurance is really something which is, as I was explaining, mainly done by large multinationals. If you look at the captives that have been set up and what's going on in the industry, it's lots and lots of large companies and multinationals that do this. Um, After spending some time, a couple of years in Miami, talking to lots of people, it's actually interesting. The people in the captive insurance industry are very focused on um, large multinationals because, of course, there still is the majority of large multinationals out there that don't have captive insurance companies, and so there's everything to play for. But captive insurance can work legitimately quite well for smaller um, companies. Groups of companies can come together. That takes a lot of work to do group companies. So we'll talk about that in another video. Um, but what's happening? I think this is what I see is that I think the guys in the captive insurance industry are spending all their time talking and naturally targeting and networking and getting to know the people in these large multinational businesses and corporations. It's quite intriguing. There is the owner managers, the international families, especially those doing less than 100 million, raising less than 100 million in funds or have revenues of, less than 50 million or whatever. I would say that in this space, there's much less focus or presence of, I don't see the footprints of the captive insurance industry. Basically, what I mean by all that is I talk to a lot of people in the space that I operate in, owner managers and families that run international businesses. And very few to none of them know anything about captive insurance. And the simple fact of the matter is that a lot of these international families are running very profitable businesses in Latin America, Africa. These are international businesses. They're either exporting stuff or they're sourcing stuff in one country and exporting it to another, like sourcing agricultural stuff in Brazil and exporting it to China. They're drilling oil from relatively low risk countries, very low risk countries in Latin America, and of course selling that oil to global brokers, quite easily. Um, and the biggest risks. I mean, these are not really risks because you can in all these types of operations you can structure legitimate solutions around the devaluation risk, accessing foreign currency, and so on and so forth. Because the governments all have policies that encourage investment. So captive insurance can actually bring a lot to these small projects, which are not touched by large regulated institutions, banks, private equity companies. And so you're really looking at not even family offices as investors, but you're looking at high net worth persons as investors. And a lot of US high net worth persons are definitely at the moment looking at getting out of the US stock market, or certainly reducing their exposure to the stock market and to paper stuff, and getting some real alternative investments. But people find the find it prohibitive. They find the international aspect prohibitive. The potential for fraud, compliance risk. Their private banks and trustees don't like compliance risk. They don't like unregulated structures. And so this is why we talk about using international private investment fund, but a regulated fund manager to structure international investments and offer that to U.S. investors. But still, there's a lot of international operational commercial risk that remains in projects like this, and so you can reduce that risk significantly, and you can reduce the cost of capital significantly in a project like this by using a captive insurance company. And a captive insurance company does not have, when you have your own captive insurance company, you're paying an insurance premium to that. First and foremost, the insurance premium does not need to be the same as a large commercial carrier. Large commercial carriers have thousands of employees, hundreds of offices and real estate buildings, IT systems, massive overheads. They have large marketing budgets. They have large executive bonus salaries and all these things. Your captive insurance company doesn't have any of that. So the actual correct economic insurance premium that your insurance company will charge for the risk that is being written is, so basically more of your money goes towards actually covering insurance risk, which means basically a reduction in your insurance premium. If you don't have any claims against your insurance company, your insurance premiums accumulate over time. So in 3 years' time, if you're paying $3 million a year in insurance, then basically your insurance premiums will accumulate if there are no claims. Now, you may ask, well, why would the insurance premiums be $3 million? It's just an example, but because you're an international business and you want to attract international investors, you might insure a lot of operational risks and write a significant insurance policy to your premium, to your captive insurance company. What that means is that basically your insurance premium is tax deductible in the jurisdiction that you're working and operating in, and of course, tax deductible expenses reduce profits, reduce taxes, and then your captive insurance company is going to be based in a jurisdiction like Barbados, which is where I am based. It's not the only Caribbean jurisdiction that does captive insurance companies, regulates and operates them, but you can operate good captive insurance companies here. There's lots of global reinsurance companies here in Barbados. And the key thing about captive insurance companies for owner managers is that you can vastly reduce your risk. And when you reduce the risk to U.S. investors who are high net worth persons are highly conservative, and they have trustees and private banks and trustees who are also conservative. A captive insurance company is a regulated entity. It has to do regulated reporting, financial reporting, regular regulated reporting. And so it really helps with the perception. It reduces your cost of capital because you're accumulating the insurance premiums in your own captive insurance company. And you can even boost the returns to some of your best investors by offering them shares in your captive insurance company. You can also remunerate some of your executives with shares in your captive insurance company. And the captive insurance company, in most countries, the governments, central banks will allow access to hard currency in order to pay insurance premiums, because politicians and policymakers understand the fundamental need for insurance in most countries. And so, it's not impossible it's easier to access foreign currency. So a captive insurance company is a legitimate way of getting profits and risk out of your project and increase your ability to get funding. And so this is why owner managers and family office buildings should set up a captive insurance company along with your international private investment fund, and that's ideal. That's really where you want to consider if you want to raise 30, 40, $50 million. A captive insurance company is definitely what you should look into or put into your offer memorandum or investment proposal. Okay, that's it for now. In the next international arbitrage video, I think we'll cover group captive insurance. Cheers.